Okay, so you want to get right to the heart of what's really going on with crypto crime, right? And that's exactly what we're doing today, folks. We're going to do a deep dive into this Chainalysis 2024 crypto crime report. Pull out those key insights, those kind of like surprising shifts and trends, and then talk about, what it all means for you, the listener.
Yeah, you got it. We've got this incredible analysis, this report, and it is packed with on-chain data covering all sorts of illicit crypto activity in 2023. Think of this like your cheat sheet to understanding, the big trends. We're talking ransomware, we're talking scams, hacking stolen funds, the tactics these guys are using, even the darknet markets. We'll look at sanctions and terrorism financing. And just so you know, unless we specifically call it out like the whole FTX thing, we're mostly focused on what we can actually see happening on the blockchain, right?
Right. So let's start with the thing that kind of jumps out right away. The big numbers show a pretty big drop in the total amount of crypto going into addresses associated with crime in 2023. It's down to $24.2 billion from almost $40 billion the year before. That's a huge drop. What's going on there?
Yeah, it's a big shift, no doubt about it. And it brings up some interesting questions. It's not just the total value that went down either. The percentage of all crypto transactions that are tied to crime also went down from like 0.42% to 0.34%. So it seems like even though we hear a lot about the bad guys, criminal activity is actually becoming a smaller part of the whole crypto world. Now, Chainalysis does say that these are likely on the low end, and the numbers for 2023 might go up as they find more bad addresses, like what happened with their 2022 numbers. They had to revise those upward quite a bit when they figured in the whole FTX creditor thing. That was a whole mess. That wasn't just about on-chain stuff. But yeah, that initial drop in 2023 is something to watch for sure.
For sure. And it's not just the amount of money, it's the types of crypto they're using. Like, I was really surprised that stable coins are now the biggest part of those crime transactions. You always hear about Bitcoin being the go-to for illegal stuff, right? What's with the change?
It's interesting, right? Bitcoin used to be the king of crime crypto, maybe because it was the first and it's everywhere. But stablecoins getting popular for crime is just like them getting big in the regular crypto world. They're stable in price, so that makes sense for doing transactions. But it's not like everyone switched. Bitcoin's still the top dog for things like ransomware payments and darknet markets. So yeah, stablecoins are leading overall, but Bitcoin still has its corners. It makes you think about what different criminals need and prefer, right?
Let's talk about one of those corners where Bitcoin is still number one ransomware. Even though crime went down, overall ransomware payments actually went up a lot in 2023. Hit over $1 billion for the first time. Kind of scary considering it went down in 2022. What caused that jump?
You're right. In 2022, things looked a bit better ransomware-wise. There were some reasons for that. The whole Russia-Ukraine thing messed up some cybercrime operations, and some companies didn't want to pay ransoms because of sanctions, especially with groups like Conti. Plus, law enforcement had some big wins, too. Remember when the FBI got into the Hive ransomware network? That stopped probably hundreds of millions in payments. But criminals are clever. 2023 saw way more attacks, they got bigger, and the volume was crazy. More ransomware gangs popped up, and there were new versions of the software. One big thing was big game hunting, attackers going after really big, important organizations for massive payouts, like that Moviet vulnerability that Clo2Pre group exploited. Over 100 million in ransom demands from that one.
Big game hunting. That really says it all, doesn't it?
Yeah.
The report also talks about this ransomware as a service thing where he asks, how does that help these attacks happen?
Think of RA as like a franchise for cybercrime. The guys who make the ransomware, the core developers, they rent it out to affiliates who do the actual attacks. Then they split the profits when a ransom gets paid. This makes it easy for anyone to get into ransomware because they don't need to build the malware themselves, right? It's a pretty low barrier to entry. Then you've got initial access brokers, IABs. These guys specialize in breaking into a network, maybe through a security flaw or phishing. Then they sell that access to ransomware operators. So it's like this whole interconnected system that helps these attacks grow.
It's efficient, all right, sadly. So these ransoms get paid huge amounts in crypto. How do they turn it into real money? Where do they launder it?
The report has some good info on this. Centralized exchanges and mixers, those have been popular for laundering ransomware money. But in 2023, we saw them using more different services. Things like cross-chain bridges. Those let you move assets between different blockchains. They're also using instant exchangers and even online gambling sites. This could be because the usual ways are getting more attention from law enforcement, and there are stricter rules about anti-money laundering, AML, and know your customer KYC at some of those traditional places. The funny thing is, even though they're using more different services, a lot of the money still goes through just one or two big ones in each category.
Makes sense. Got to change things up or get caught, right? Let's talk about money laundering in general.
Yeah.
The report says the amount of crypto going from crime addresses to laundering services went down in 2023. What were the big things you noticed there?
We definitely saw a drop, down to 22.2 billion from 31.5 in 2022. That could be partly because the whole amount of crime transactions went down, like we talked about before. Centralized exchanges are still the main place for this money. But what's interesting is more of it's going to DeFi protocols, decentralized finance. That's probably because DeFi is growing and there's more liquidity there. Even though DeFi transactions are pretty transparent, it might not be the best for hiding money. Another thing we saw is most of the money laundering happens through a few fiat off-ramping services. Almost 72% went to just 5 services in 2023. But if you look at the deposit addresses within those services, it's actually less concentrated than last year, so maybe criminals are spreading their money around more to avoid getting flagged.
And the report talks about how these really sophisticated players like the Lazarus Group are always changing their tactics. What new stuff are they doing?
Oh yeah, groups like Lazarus, they're persistent and they're good at adapting. After that Sinbad mixer got taken down and sanctioned by OFAC, they started using Yomix more, another Bitcoin mixer. Yomix grew a lot in 2023, and a good chunk of its money can be traced back to crypto hacks. We're also seeing more chain hopping through those cross-chain bridges. This is where they move stolen funds between different blockchains. It makes it way harder to find where it came from and where it's going. Like Lazarus Group, they've been moving stolen crypto through all these different bridges and blockchains, sometimes switching it to stable coins along the way, just to make things extra confusing.
So let's move on to hacking and stolen funds from crypto platforms. The report says way less was stolen in 2023, even though there were actually more hacks.
That sounds weird, right?
It does at first, doesn't it? More hacks, but less stolen. So even though the number of hacks went up, the total value stolen from platforms in 2023 actually dropped by more than half, down to $1.7 billion. The main reason was a big drop in how much was stolen from DeFi protocols. Those were a big problem in 2021 and 2022, but the amount stolen from them went down by over 63% in 2023.
That's good news, I guess, with all the worry about DeFi security.
Yeah.
What do you think made that happen? Are these platforms getting better at protecting themselves?
It's probably a few things working together. Some security experts think DeFi projects are getting better at security, maybe doing more code audits and being more careful when they develop stuff. But it also could be that there was less DeFi activity overall in 2023, so with less money locked in these protocols, there might have just been less to steal. Hard to say for sure which reason was bigger, but hopefully it means things are getting more secure in DeFi.
The report says those North Korea-linked hacking groups are still a problem. What were they up to in 2023?
Oh yeah, they're still out there. Those North Korean cybercrime groups like Lazarus Group and Kimsuki, they kept on hacking. In 2023, they did the most crypto hacks ever recorded, 20 separate ones. But the total they stole was a little lower than 2022, a bit over $1 billion. They're still going after all sorts of targets, DeFi platforms, centralized exchanges, crypto wallets. That atomic wallet hack in June 2023 shows just how good they are. They did all this chain hopping through exchanges and bridges and used mixers like Sinbad before it got sanctioned.
Okay, let's switch gears and talk about market manipulation, specifically those pump and dump schemes that happen on decentralized exchanges. How does looking at on-chain data help us find this kind of manipulation?
On-chain data by itself can't prove market manipulation. You usually need other stuff too, like what's happening on social media. But it can definitely show some fishy trading patterns that make you suspicious. Chainalysis looked at a bunch of tokens launched on Ethereum in 2023, and they were looking for patterns that look like pump and dumps. And they found that a lot of them, over 53%, had these characteristics. One thing they looked for was one address pulling out a big chunk of the initial liquidity right after trading started leaving almost nothing for anyone else buying in.
That sounds a lot like a rug pull, right? The kind of thing you hear about all the time. Did these shady tokens actually make up a big part of the trading on those DEXs, though?
Actually, no. Even though a lot of tokens had those suspicious patterns, they only made up a tiny fraction of the trading volume on Ethereum DXs in 2023, like 1.3%. So even though these schemes are happening, they don't seem to be moving the market that much. The report even had a case study of one person who created 81 different tokens that fit their pump and dump criteria and made a decent profit. But even that was just a small part of the whole DX world.
Now, for a much more serious topic that doesn't get enough attention, CSAM, child sexual abuse material. The report says this is hard to track in the crypto world. What were some of the key things they found?
Yeah, this is a horrible part of crypto crime, and just looking at how much money is involved doesn't really show how much harm is being done. Chainalysis made this more detailed framework to look at the crypto CSAM market. They look at scale severity, sophistication, and resilience. Their analysis says that even though the scale and severity might have peaked in 2021 and gone down since then, the CSAM vendors are getting better at what they do, and it's harder to catch them and shut them down.
That's really scary. What do you think is making them better at this and harder to stop?
The data shows that privacy coins like Monero and instant exchangers that let you trade to and from Monero might be a big part of it. Bitcoin is still the main crypto used to buy CSAM at first, but using these privacy tools to launder the money afterwards might be why it's getting tougher for law enforcement to track the money and stop them. The report found that CSAM vendors who use those Monero instant exchangers stay in business longer than those who don't, so these tools are definitely helping them.
Even with these challenges, law enforcement is still making some progress right. The report talks about the case Homeland Security investigations did.
That's right. That case is a perfect example of how blockchain analysis can be so important in fighting CSAM. It started with just a website address on a piece of paper, and from there, HSI agents followed the Bitcoin transactions, and they ended up finding the person running this big, dark website that was distributing child sexual abuse material. They made arrests, and they even rescued a child. Plus, they tracked the money to a buyer who was also making CSAM, and he got sent to prison for a long time. It just goes to show how important blockchain analysis is and how law enforcement and the crypto industry working together can really make a difference with these awful crimes.
Let's talk about sanctions now. The report says a big chunk of crime transactions in 2023 were connected to groups and places that are under sanctions. What can you tell us about that?
This is a big deal. Sanctioned entities and jurisdictions were behind a whopping 61.5% of all the crime transactions in 2023. That's almost $15 billion. It's interesting, though, because in 2023, it seems like OFAC sanctions were more about going after specific people and groups involved in crime rather than the big crypto companies. There were some exceptions, though, like that Sinbad.io mixer and Genesis Market, which was a big online marketplace for criminals. We also saw more sanctions against drug trafficking and North Korea's illegal activities that use crypto.
The report mentions how sanctioned mixers like Tornado Cash are still being used. What's going on with those services?
Tornado Cash was sanctioned in 2022, but because it's decentralized, it hasn't completely shut down. The amount of money going into it did drop a lot right after the sanctions, but it's been slowly going back up. This shows you how hard it is to enforce sanctions against these decentralized things. The report does say that the sanctions have made a difference, though, because the money flowing into Tornado Cash is still much lower than it was before. Then there's Garantax. That's a Russian crypto exchange that was sanctioned for helping with money laundering. Their case shows how hard it is when these companies are in countries that don't really follow international sanctions. The report also mentions how countries like Iran might be using crypto to get around sanctions. They talk about Iranian crypto exchanges and even Bitcoin mining happening in the country.
Let's move on to terrorism financing. The report says it's not a big part of crypto crime, but it's still serious and complicated. What makes it so hard to track this kind of activity on the blockchain?
Figuring out if something is terrorism financing on the blockchain is really tough. One of the biggest problems is telling the difference between these transactions and real charity or humanitarian aid. Especially in places where there's conflict, it's easy to get those transaction patterns wrong, which could mean people get unfairly penalized or actual terrorism financing gets missed. The report talks about this group, Outlaw, that used a complex network of regular crypto exchanges and other services to move money. It was really hard to spot. Public crowdfunding campaigns haven't worked well for terrorist groups because the blockchain is so transparent, but they're still trying to get money through social media, often making it look like they're collecting for humanitarian aid. That makes it really hard to tell what's real and what's not. We really need the private sector and law enforcement to work together to stop terrorism financing, and sometimes that's led to them actually seizing money.
Last but not least, let's talk about darknet markets. The report says they made more money in 2023 after a dip in 2022. What's behind that?
Yeah, in 2022, darknet markets took a hit because that big Hydra marketplace got shut down. It was the biggest one out there. In 2023, no one market has really taken its place, but overall, darknet markets are back up. They made $1.7 billion, which includes money from fraud shops. Some of
Hmm.
the big names now are Mega Darknet Market and Kraken Market. One interesting thing is we're seeing darknet markets specialize more now. Different platforms focus on different criminal activities like providing stuff for cybercrime, helping to get illegal drugs, or offering different ways to launder money and buy illegal things. This might be why no single market has become as big as Hydra was, even though a lot of these markets say they don't allow fentanyl, and fentanyl-laced drugs are still all over them. The Dutch National Police did this big investigation into Genesis Market, which was a fancy fraud shop selling stolen digital identities. It shows you how complex this stuff is. We're also seeing more fraud shops using crypto payment processors to make things run smoother.
So basically, from this deep dive into the Chainalysis report, we see that overall crypto crime is down, but things like ransomware and darknet markets are making more money. Stable coins are the big thing now for a lot of crime, but Bitcoin is still the favorite in some areas. The ways criminals launder money and the tactics hackers use are getting more complex. They're using cross-chain bridges and new mixing services. Scams like those romance scams and approval phishing are still a big problem for regular people. And sanctions are having a huge impact on the crypto crime world.
Exactly. This report gives a really good and detailed picture of the crypto crime world in 2023, and it's all based on a ton of on-chain data and serious analysis. It shows how this is always changing and how cybercriminals, law enforcement, and the whole crypto industry are constantly battling it out.
It's a lot to think about, but it's really eye-opening. So for you, the listeners, think about this. Blockchain technology is transparent, right? So how can we as individuals and institutions use that transparency to protect ourselves and make the crypto world safer? It makes you think about how all these trends affect the way we understand and use digital currencies. And if any of these specific things really caught your attention, like the rise of ransomware, the whole darknet market thing, or the fight against CSAM, you should definitely check out the full Chainalysis report. It's worth a read. Thanks for joining us on this deep dive.